welcome back to my YouTube channel. Welcome back, one. Welcome back. Today we are receiving more bad news coming out from the stock market. A lot of stuff for us to talk about since recession concern are mounting and the Federal Reserve is not backing down from their stance. So there's still a highly chance of the Federal Reserve hiking another 75 basis point within the next couple of weeks here. So that's what we are expecting from the market. But let's look at today data release just came out from the market. Initial jobless claim report lower than expected. For economic predicted around 240,000 jobless claim to be filed. But however, jobless claim data release was phenomenal. Beat economics expectation, and it just came out lower than expected. That is really great. Productivity revision. We have seen from negative 4.1%. Economic forecast was around negative 4.3%. Let's look at unit labor cost revision for second quarter, 10.2%. So that's what we are seeing. But what's really important is the S&P U.S. Manufacturing PMI for August, which we are seeing a slight increase at 0.2 point here. So we did beat economics expectation. And our U.S. Manufacturing PMI data say, hey, there's still some economic activity within the market, but however, it is still nearing our expectation, but not, they did not miss the market expectation. That's what we are seeing. So for construction spending, very neutral. So they did meet economics expectation. So that's what we are seeing. So that's what we are seeing for the month of July. And as right now, the market is cooling down. We are seeing this, and with jobless claim data released this morning, and there's still a highly chance that the Federal Reserve say, hey, the market can't handle this and be prepared for another 75 basis point. That is what many of us are expecting. So that's what we are still waiting for coming out from the market. Let's look forward. U.S. manufacturing growth holds steady. So manufacturing has not performed very well, even though we did beat economics expectation by scoring above 0.2 point. That is what we have seen. But however, manufacturing is still steady as supply chain continue to be a very problematic situation here. So let's look here. U.S. manufacturing growth steady in August at the slowest pace in over 2 years, with a measure of material costs decline for a fifth straight month and a welcome sign inflationary pressure are abated. So the Federal Reserve has been increasing their interest rate, and right now we are seeing inflation are easing. So we are still above our critical support level, which is at 50 point, and there's still a little bit sign of expansion here. That's what we are seeing from the market, but however, not that great growth which we are expecting. But if the U.S. PMI data came out lower than 50, we are in a contraction era, re-emphasizing and reassuring the market that, hey, we are really in a technical bear market and we are going to re-enter a bear market within the next couple of days here. But we are still seeing the market is cooling down. Inflation is easing, though. That's what many people are very worrying about. But let's look forward. Jobless claim tumbled to 9-week low of 232,000 applicants. So U.S. layoff continue to slow down. And this is what we are still seeing, folks. The market is very strong. The U.S. market is very strong despite the fact of recession concern. But however, the American people are still worried due to their lack of sentiment within the market. They are not very confident in the market than they were in the past. So right now, that's what we are seeing from the market. And market is very strong right now. Very strong, very formidable too against the recession. And that's why the Federal Reserve saying, hey, you guys can handle this and be prepared. So that's what we are seeing and preparing to hear from the Federal Reserve. So they say with this recent U.S. job data that more than 528,000 jobs were added in the month of July. 130,000 jobs were added in the month of August. And we have seen our jobless claim hitting a couple week low here, hitting a couple week low. So that's why we are seeing the Federal Reserve say, hey, the market is very strong. There's no likelihood of you entering a recession. That's why the Federal Reserve say, hey, prepare for a third jumbo hike, which is a 75 basic point here. That is what we are expecting. There's a less likely chance of the Federal Reserve raising 100 basic point, which is not going to happen. But a 75 basic point is what very likely coming out from the market. Let's look forward, folks. So, stock market is plunging and the Fed is giving up on a soft landing. There's still a chance of the U.S. entering a recession as a result of the Federal Reserve position and their plan to combat inflation. So, we are seeing slow economic investment within our economy, where many investment companies, many tech companies, many corporations are pulling back from their investment and they are beginning to enforce significant cost measure within their infrastructure. That is what we are seeing. As a result, there's still a high chance of the U.S. entering a recession, and we are prepared for that mindset because when it happens, it is not going to look great for the American people. So a lot of stuff for us to talk about since recession concerns are still along the way. But just recently, Jeremy Grantham said, hey, we are not in a recession yet. We are just in a super bubble, very similar during the dot-com bubble, which the bubble actually burst. And as a result, trillion and trillion of dollars were wiped out from the market in the old day. So Jeremy Grantham said, hey, we are in an era right now very similar to the super bubble that we have faced or experienced in the past. And he said, hey, prepare for this mindset. And that's what we see. And a sub bubble is blowing up. And he say we have to wait for it to pop. And when it pop, that term, which everyone knows, is that is a recession, folks. That is a recession. And it's going to cost investors trillion and trillion of dollars because this super bubble going to hurt financially. As the Federal Reserve continues to hike up their interest rate, that is what we are seeing from the market and continue to be here from the market too. Let's look forward. So UBS say, hey, the chance of the U.S. enter recession just hit 60%. So if I ask out 10 American people, they say 6 out of 10 replies say, hey, we are heading in a direction. We are on toward a path toward a recession here. So UBS data release just really shocked the whole investor community. Really here, we are seeing less sentiment and confidence in the market with a 60% chance of the U.S. entering a recession within the next couple months here, within the next couple months. That's just a beginning, folks. So a lot of stuff for us to talk about since recession concern all mounted and we are preparing for that mindset. Let's look forward. Fintech firm Karana just lose triple billion of dollars after aggressive U.S. expansion, and right now they are announcing massive layoff. So they report a pre-tax loss of nearly 6.2 billion Swedish krona dollar. That is a lot, folks. That is a lot. This is what we are seeing. Karana is suffering very hard from the market as a result of high interest rate and less spending from consumer. That's what really hurt them as overall. Okay, folks, and I know what are my thoughts with the stock market as of right now. Recession concern all mountain, and we are preparing for that mindset because the likelihood the U.S. entering a recession is very high. Even though we have seen from this recent data release, very confident in the market, but however, the Federal Reserve will and possibly raise up another 75 basis point within the next couple of weeks. We are prepared to hear from the Federal Reserve position, and once it has been officially announced, that is when we are able to understand the true phenomenon of the market right now. And then you enjoy my video, please click that subscribe button, and also don't forget to click that like button. Thank you everyone, have a nice day.